Welcome to Impact Farming, where we introduce you to the people and ideas that will have a massive impact on your farming operation. Brought to you by Farm Marketer. Sit down, start the engine, and let's roll with today's show.
So welcome to the brew house. This is where the magic happens.
So similar to you, Tavis, we've become a real recipe-driven industry. So part of that recipe for us is starting with a really good high-quality seed.
We want to make sure that pretty much every single kernel that comes into our malt house is ready to go to work.
That's going to create a better yield for us, but a much better quality barley kernel for you at Freehold.
Cheers to keeping it local.
Cheers, guys.
Hello, everybody, and welcome back to another episode of the Impact Farming Show. Today, we have a great guest returning once again, JP Gervais, who is the Vice President and Chief Agricultural Economist for Farm Credit Canada. Welcome back, JP.
Hey, thanks so much for inviting me on, Tracy. It's a pleasure to be here.
What crazy times. This is our first not in-person interview we've done.
Yeah, for sure. Crazy is maybe an understatement. It's really quite something out there. I mean, there's a lot of things rocking the ag markets and the food markets. So I'm sure that we're going to get a little bit of time to address that as well on top of the topic today.
Absolutely. That's a perfect lead-in. So we brought JP back onto the show for our annual rendezvous to discuss the FCC Land Values Report. It came out beginning of April, and this report is covering the period of 2019, right?
Correct. Yeah, absolutely.
So overall, why don't we start with the national trend? And you can take it away from that point.
Yeah, well, the average national increase was 5.2%. I'm 5.2%. I'm going to look at my numbers throughout the interview. I just want to make sure I got the numbers right. I know I got the story right, but I also want to make sure I got the numbers right. So
a lot of numbers.
5.2% is a national increase. And one of the things that I believe is one of the stylized facts behind what we found in the report this year is this continued slowdown in the rate of increase. So farmland values, just to be clear, are still going up, but at a slower pace. And really, you have to go all the way back to 2013, really, to start seeing this pattern emerge, right? So from 2013 to 14 is when we saw this first decline in the rate of increase, right? We went, 2013 was the all-time high at 22.1%, quite significant. Not only double-digit growth, but in the 20% range. So that was significant. And then you saw I would say a steady decline. Some provinces experienced this decline in rate of increases a little bit before. Some other provinces experienced this rate of increase declining a little bit after. But 2014, 15, 16, 17, there's been a little bit of an upward tick, but now we stand at 5.2%, which in one way makes sense because we know that farm cash receipts and gross income at the farm level has been somewhat leveling out. And again, different provinces will be experiencing different trends. So that makes sense from that standpoint. But having said that, when you're talking about 5.2% and being the lowest rate of increase of the last 10 years, that's still a significant increase at 5.2%. So we can go into some of the detail as to why later on.
Okay, excellent. You're right. It's different when we had that period, I think from 2011 to 15, that grow. And then now when we're talking about it, it's like, oh, right? But it's still a good number, right?
Absolutely. It's like I said, it's the lowest of the last decade, but you're still talking about 5.2% at a time where farm income is at best leveling out. And in some provinces, if I think of Saskatchewan, for example, that has 40% of all the farmable acres in Canada. Well, if you think of Saskatchewan, we've seen some consecutive years of challenging growing conditions and so forth, and across the prairies, it's been the case as well. It's a rate of increase in farm income that is right around zero. If you think of net income, it's slightly declining, and yet we see farmland values climb. So I think that from that standpoint, it's a good news story. But it also raises a few questions that I believe, as an industry, we need to be aware of.
Okay, good. So let's carry on and we'll cover those. So I want to ask you, was there any provinces in the report that stood out, whether they had a higher than average increase or ones that dropped? Anything that just popped right out?
Well, for sure, when you look at the numbers and you look at two provinces in Atlantic Canada that recorded, New Brunswick and PEI recorded respectively 17.2% and 22.6% increases in 2019. So that stands out as, wow, very significant and very large. But again, you need to, it's a story about supply and demand. And when you think of an asset, or when we are bringing up the topic of an asset like farmland, you also have to understand that this is not an asset that moves very fast. I mean, in a sense that, it's not unusual to see those larger shifts in 1 year, but when you put everything in context over 2 years or 3 years, then what we're seeing in a province starts, to balance out with what we saw in another province, right? So in the case of New Brunswick and PEI, the previous year in 2018, the rate of increase was below the national average. Now, with some of the demand for potato acres that have been going up, that's part of the reason why we're seeing a very, very strong increase in 2019, when in 2018 the increase was more moderated, I would say.
Okay. Good old supply and demand never fails us.
Never fails.
Never fails. So why don't we go right into the factors that are affecting I'm going to call it the cooling off of the land frenzy. Why don't we talk about those factors? What plays into affecting the demand on farmland?
Well, to me, on the demand side, it's about two things mostly. It's about farm income and interest rates. So on the farm income side, I've already discussed a little bit. I mean, at best, we've seen leveling out of farm income. So from that standpoint, it's not higher income that fuels the demand for farmland. You were asking me, if there was anything surprising about one province or another. I would say that overall, if I think of what surprises me in the report, is that we're still looking at 5.2% increase at a time when farm income was flat and borrowing costs were higher, right? So we didn't have any increase in the Bank of Canada policy rate in 2019, but we had increases in 2017 and 2018. Right. These increases, they take time to get through the economy, to get to go through all the the supply chain, in other words, and the financial supply chain in that case, and then go all the way through all the way to operations when they have to renew their loans and so forth. And so I think perhaps one of the things that I misunderstood, thinking about what 2019 would look like before getting the results, was that, well, at the end of the day, yes, borrowing costs for farms did increase, but they did remain very low from an historical standpoint. And so low borrowing costs from an historical standpoint, a profitability long-term that I believe is still very much positive. We've had, from the prairies, we've had some significant challenges 3 years in a row in a lot of cases where, production challenges emerged for different reasons. And, it was dry, it was wet, and
wet, whatever the case was, right? Yeah. Yeah.
So at the end of the day, if you put these challenges aside, I think, it's a demand and supply story. On the demand front, I think there's still a lot of confidence among buyers that land values, that land can be a productive asset. And on the supply side, well, there's a very limited supply of available land. And so you do have buyers that are still willing to bid, and in some cases bid up the price of land. When we report, also one caveat to all of this, when we report in percentage terms, right, you also have to be careful because it's not all land that will be moving up at the same pace. And land is a very local asset. And so what I would say over the last couple of years is what we recorded, or what we reviewed and witnessed, is that land values or farmland in the bottom half of the scale of quality wise, or in terms of productivity, well, that land in that bottom half, that second half, would probably be going up at a faster pace than the one in a land that would be in the top half of the marketplace, right? So in other words, I think there's more cautious operations are looking for land that perhaps would not initially valued as high and then was not going through an increase to begin with in the years 2015, 16, 17, and then 18 and 19. We saw some producers circle back and bid up that land in that second half of the market, I would say. But overall, I think land values are holding up well, considering some of the challenges and pressures we have on farm income.
Well, and that was one of my later on questions for you. What are you seeing? What are the lenders seeing at FCC? Is the interest still there? The confidence still there? And you're saying, yeah, right?
Oh, yes. And then right now, as we're speaking, right, we're right in the middle of this COVID-19 crisis. I mean, provincial economies are starting to reopen at various different paces, and there is going to be a rebound from this entire crisis. It's just that we ignore right now the length of the time that it will require us to rebound. Food service is going to reopen. What we've seen with COVID-19 is the tremendous disruptions that occurred throughout the entire supply chain, right? You got food service shutting down. You have a big response at the retail level, but yet, not enough to compensate some of the shutdowns in the food service. Excess supply at the farm level. We got disruptions in processing plants, higher costs throughout the entire supply chain. There's been lots of disruptions. But the one thing that we're saying is that farm operations are still, looking to make investments when it makes sense, right? So if you're talking about a business that has already made some investments in previous years, well, perhaps now is the time to sort of step back, consolidate, make sure that from a liquidity position, cash flow wise, and all those good financial risk measures, that the operation's fine. And we do have, though, operations that are still looking to invest. And from a land standpoint, we're not, when we're talking being in the month of May right now, we're not in the busiest part of the year when it comes to farmland transactions that would occur, between October and March, April. But we haven't seen since the early part of the year, the 2020, any noticeable slowdown. Maybe a little bit more cautious for sure, because the challenges that we face since the middle of March are quite significant because of this COVID-19 crisis. But I would say that, so far the farmland market seems to be holding up okay.
And that's what we hear from our clients here, because we are the leading ag real estate website in Canada. And you're talking to agents. I think there was that emotional roller coaster, right? That period of time, a little bit, where people just had to adjust. But if I put myself in Farmer Tracy's shoes and land comes up in my area, you're so right where you said it's a supply and demand thing. If the piece of property that we've been eyeing up that we want comes up for sale, well, are we a little more cautious right now? Yeah. But do we believe that things will straighten out? Yeah. Like you said, we're seeing there's hope. There's light at the end of the tunnel.
There's going to be a rebound, and there's one thing that I truly believe in, is that the long-term viability of Canadian ag is positive. And that's not to downplay or minimize some of the challenges in livestock sectors right now. We're seeing some of the very significant losses across different production and sectors, even some challenges as well when it comes to crops. But the long-term viability remains positive. The demand for what we sell and what we grow is, in my opinion, going to remain strong. We just have to, as you said, you're going to be more careful, but it doesn't prevent you from sharpening your pencil and really looking at it. And I think that's what's going on right now. I think a bit more cautious, but I do think that long-term viability hasn't changed.
I think you answered about 5 questions all in one. That's really good. And, I wanted to speak with you about that too, because it's hard as human beings to step away from the emotions, right? you got to wear those two hats, the business person and then the emotional person that is listening to the news and it feels like the sky's falling. I was really excited to hear from you that you do think it's positive. We've had a tough couple years. I mean, trade issues, weather issues, and then now COVID hits. So,
Yep. Yeah. I mean, you are so right in talking about having to have the business mind to make decisions that are in the long-term best interest of your business. So, and I would say in that case, put your CEO hat on, in the sense that, you know, if you look at a CEO, and I'm looking at our CEO at FCC, I'm biased, obviously, with great CEO, and what he's doing in that case, you know, during the crisis, is to look around and seek the input from different people within the business, and as a farm operators and owning the farm, it's okay not to have all the answers, or to have a second opinion of somebody you trust, whether it's a formal advisor, whether it's the equivalent of some sort of board of directors. I think we don't do that nearly enough in the farm sector, where
Amen.
It's okay, right, to be autonomous, to be a leader. Absolutely. That's what's great about owning a business, and for sure. At the same time, we all need to have advisors, and we all need to sort of lean in on somebody to, hey, you know, does that make sense? You know, does that investment make sense for the long-term success of the business? And I think that's the key right now, is to just have that CEO hat on right now, and not to be the only one, you know, or looking at just, you know, leaning on yourself, but leaning on others as well, that have the expertise, that have some knowledge that perhaps they can complement what you have or you don't have.
Excellent. Those are great words of wisdom. So I know you've touched on this a few times throughout, but that's great words of wisdom. Maybe I want to step back and get you to do the good old wizard cap, as I always like you to do. And I know you touched on it, but is there anything more? You have an optimistic outlook. What can we expect COVID to do? What are we looking at? Does anybody know what this looks like for the next, let's call it 6 months, year, 5 years? Anything much further is way out, but what's your thoughts on that?
Well, I would say I got tons of curiosities, right, in terms of, not necessarily have answers, but I get tons of curiosities. I mean, one of my curiosities right now is to understand some of those shifts that we're seeing throughout the supply chain. What are those going to do in terms of profitability going forward, right? So it's one thing to say consumers are more, maybe at the outset of or after this crisis is behind us, you know, consumers are going to be more open to know about where their food's coming from and so forth. Totally believe that. When it comes to food purchasing decisions, is that going to make a difference at the retail level? You know, historically, despite all our efforts, I mean, you know, price is the number one criteria for consumers. And so that's the reason why I say, well, we just need to continue investing in our productivity and our efficiency. I mean, it's a difficult message to hear, but one of the things, the numbers don't lie. One of the things that we see all the time at FCC is that, and that I'm saying it's a difficult thing to hear, because a lot of businesses have made some investments. They worked really hard to get where they are. And yet, you know, you tell them, well, you know what? You could find a bit more efficiencies in your operations. And you're like, really? Well, yeah. And you know, there's a lot of diversity in terms of the efficiency of the different operations that, you know, hey, take the time to understand, measure, assess where you are, because you can't manage what you don't measure, right? So start measuring where you're at in terms of your efficiency, you know, looking at your gross margin, looking at some of the financial risk you're exposed to. Do you have a really good idea of where your cash flow concerns could emerge, or where they could emerge from, those type of things? Because there's a bunch of things that we don't know about the future. We don't know about the extra cost that this crisis is going to impose going forward on the entire supply chain, and how much of those costs are going to be passed by all the way up to the farm, right? And yeah, I had tons of questions that I have, you know, not necessarily an answer, more a curiosity around, like, what is that going to look and for farm operations. And I do think that it starts with, you know, when you don't have all the answers, it starts with some risk management on the financial side of things, on the production side, and on the marketing side as well.
So get a good team of advisors. like you said earlier, right?
Yeah, be a CEO is always what I go to, right? A CEO of any big company is not the sole expert in managing labor or financials or marketing, the successful CEO, he or she surrounds himself or herself with people that are able to help and are able to provide input into some of the decisions that need to be made, right? And I do think that while you're not going to hire a bunch of people to advise you, well, what are the partners? What input supplier can you work with? What marketer can you work with? Or finding those right business combinations, those that bring value to your business. I think that's really the key moving forward in being successful.
Excellent. Okay, I think that covers it. We reviewed the 2019 land values, what happened by province by province, any highs, lows, the economy, we chatted about that. We chatted about what you think is coming forward, words of wisdom. I'm curious what the 2020 land values are going to be.
Well, I can't hide and lie because that's most of what I've said is on the record somewhere, right? So, and I put some forecasts out there that have actually in recent years, if you look back at the last couple of years, those forecasts have been lower than what we reported as the actual rate of increase in land values. But I'm going to double back and I'm going to actually call for a lower rate of appreciation. Considering what we experienced in terms of farm income over the last few years, given some of the challenges currently, 2020 remains to be written in terms of what is going on with the market, what will be going on with the marketplace. But we know there are going to be some challenges at the end of the year, when we all measure up, how we've done and so forth. So more pressures on farm income potentially. That would lead me to believe that we're going to see a slower rate of increase in land values. Is that a bad thing? In my opinion, no, it's not. It's absolutely to be expected, in my opinion. As I said, though, in the last couple of years, that forecast has turned out to be too pessimistic in some sense because we've recorded higher increases in land values. But hey, it's not impossible to see a flat land market for a year or two. Maybe a slightly higher rate of increase in that 2 to 3% range. And I would say that it still coincides with a very healthy market. I think it still coincides with a positive long-term viability for Canadian ag. And so that's where I would go with this, that perhaps expect lower and lower rate of increases over time. And as I said, I don't think it's a sign of a weakening farm economy. I think the long-term perspective remains positive.
I love it. And you are so very well respected in this industry. And I wanted to ask you about that. And I'm happy that you said that, because to hear somebody like you positive and optimistic about the industry, it makes me feel better too. I know the egg industry is great. People have to eat. We are amazing producers, but to hear you say that, that's excellent. I think.
Well,
sorry, go ahead.
Thanks for that. No, I was going to say thanks for the feedback. And we got plenty of examples in our business at FCC where we see the success stories and we see the challenging conditions as well. As I said, it's my point is not to minimize some of the challenges. The challenges are real. Long term, I think that we still get a very positive future for ag.
Excellent. If people would like to find the 2019 report, where can they do that?
Well, the simplest way is to go to fcc.ca/farmland values. That's quite simple. So you get a pretty interesting, I find it interesting map where you can click and then zoom in, zoom out, find a little bit more information for your region within the province, with some high and lows of land values in that region with an average and so forth. I think there's lots of information that is available on our website. And then for a little bit more analysis of, is how affordable or how not affordable farmland is currently with regards to farm income and those type of things, you can go to the ag economics section. So fcc.ca/ag economics in one word, and that'll get you to the webpage where you can find different analysis on the farm economy.
Perfect. And we'll put links to that in the show notes for this episode. So if you're watching and you want to head over to FCC's website, we'll include those notes. Well, that sums up another year, JP. Hopefully you are joining me in person right beside me this time next year.
I miss seeing all the people in the industry, so certainly miss seeing you, and I really do miss the travel. It's sad to say, but I like to be out and meeting the great operations and great businesses that we have in the industry.
Me too. There was, to end on a bit of a funny note, I love my business travel, and the extroverted part of me sitting beside people and chit-chatting. I seen a very funny meme that sums it up right now. There was a woman, a businesswoman that's used to traveling. She got on a treadmill and started walking, carrying her suitcase, pretending that she was traveling in an airport. And I got a kick out of that because that's me right now. So we'll cross our fingers and we'll hope to connect this time next year in person. Sound good?
Absolutely. Always a pleasure, Tracy.
Thank you, JP. See you next time.
Bye-bye.
And thank you guys for joining us. See you next week. Bye-bye.
You've been listening to Impact Farming. For more great episodes and articles designed to help you manage and grow your farming operation, head on over to farmmarketer.com. Don't forget to sign up while you're there. We will see you on the next episode.